Everyone, it's Alex here at Cestrian Capital Research. Welcome to the Inner Circle Morning Show. It's Friday, the 9th of June. This is being recorded at 7 a.m. Eastern. Okay, a few topics today. I wanted to run over the equity index review as usual, take a look at Bitcoin and Ether, and also it's time to check in on the Inner Circle stock baskets. We'll do just an aggregate review of those in this session, and there'll be a note later on this morning with some detail. Okay, so before we do any of that, as usual, our disclaimer. So, disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in this webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in this webinar is intended to be investment advice, nor should it be relied upon to make investment decisions. Cestrian Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Cestrian Capital Research. Cestrian Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so let's do the indexed review to begin. Start off with the S&P, larger degree. As always, we use the SPY ETF for that. So right now, there's not a great deal to report on from the last 2 days. The issue with the S&P is that we are now through, by the looks of it, the sideways accumulation action that's been the case for a year now. So we entered this sideways box here in March, or more convincingly in April 22. And if we were to look at the volume profile here, these grey bars on the right-hand side, this volume profile starts at the all-time high. And what that means is that the volume of SPY shares traded has been concentrated in this box here, the sideways range, which looks for all the world like institutional accumulation. In other words, whilst big money has been busy telling everyone how terrible everything is, it's going to zero, rates, inflation, recession, blah, folks have been buying up the S&P. Surprise, surprise. Now, at some point, we would expect a breakout from here into a markup zone. It does look like the S&P is trying. It's hitting its head on this red line here, which is the resistance level that was first struck in May last year, struck hard in August, rebounded hard to the downside last August, and it's been not quite been able to push through for the last couple of weeks. So that level is around 430 on the SPY, there and thereabouts. I do believe this will be punched through. I'm not sure that it will be right now. We may see a sell-off first, but I think all the forces coming together, being solid economy, probably the Fed, let's say, easing off the gas, let's put it that way, possibly pausing rate hikes, maybe even cutting rates later in the year. All of that will conflate, I think, to drive the S&P upwards. But as yet, key level is 430, which we have to get through. If we look at the futures for a closer look, in TradingView, the futures are a bit squiffy today, and the reason for that is the contract change coming up. And so for our purposes, we use this artificial sort of continuous contract construct that TradingView offers. So this gap up you see here, I'll just ignore that. The point remains that the S&P continues to look bullish. From the December lows in the futures, we got this move up to around 4,200 for a wave 1 high, a drop down to around 3840 for a wave 2 low, and we're currently in a wave 3 up, and that wave 3 has surpassed the 100% extension of wave 1. It's not yet reached the 1.236 extension. It could go as far as the 1.618 extension, which would be around 4,500. We're a long way away from that yet, but that's the direction of travel. Thereafter, we would expect to see a sell down, back down to 4,200 or thereabouts, probably to retest this wave 1 high before a final move higher in this 5-wave cycle. Let's look at the NASDAQ. Again, let's use the QQQ for the long range analysis. QQQ, of course, has been exceptionally bullish since March this year. So we got a rapid move up off the January lows, peaked, off the October lows, peaked in November, and then sold back down again into the January lows. We then got a big move up into February, sold off down into mid-March, and since mid-March, it's just been up only. Key level in the QQQ is the 351, and it's key because it's the 23.6 retrace of this wave 3 up, so it's a key Fibonacci level. Again, what one wants to see if one is bullish is to see that 351 turned into support, tested multiple times from above, and then proven the solid support and then moved up. We're not there yet. The QQQ, as much discussed in the service here, continues to look extended to me. I would continue to expect some kind of pullback, but it's possible that we don't get one for a while. As I mentioned previously, if we look back at the last big wave upwards, this was this COVID low to 2021 high wave. There were many periods where it was straight up. Every now and then you do get around a 10% or more pullback. So let's see, we haven't had one yet since March, but one would expect it at some point. Of interest, if you look at the volume profile here, we're reaching low volume nodes. So the notion there is that as the NASDAQ continues to move up, it should get easier to move up. And the reason for that is that there will be probably less disgruntled bag holders from back here that are desirous of selling. And so you have a positive feedback loop in a way, which is as things get more bullish, things continue to get easier to become more bullish until, of course, there are no more buyers, and then we run out of buying pressure and we turn into selling pressure and we'll turn down once more. But for now, NASDAQ continues to look very bullish. If we look at the futures, again, I would ignore the specific levels in TradingView this morning, which are just affected by the contract change. But if you look at the general direction of travel, again, we keep coming up against this sort of 14,700 level on the futures, which was the most recent top struck earlier in the week. And we're there again on this artificial construct in TradingView. But again, direction of travel, what it means is we're testing this high. Now, if this is a wave 3 up, as does seem likely by its feeling, if you like, the fact that it feels unstoppable, then we could see the NASDAQ futures run all the way to 15,300 or so on before a turn down. That's the 1.618 extension of this red wave one up. So we'll see. But for now, NASDAQ continues to look very bullish. Let's do the Dow. Here's the DIA ETF. So here again, it's been sideways consolidation for some time now, and I would expect the Dow to move up pretty soon. I don't see any reason why it should sell off hard. Of course, we can always get a short-term correction, but everything about equities right now feels bullish, and so I would expect this to start to move up pretty soon. And we're not very far from a new all-time high for the Dow, so we'll see whether the Dow or the NASDAQ makes that high first, but the Dow certainly could make a break for a new high pretty soon. If we look at the YM futures, again, sound like a broken record, but I make the same point, which is ignore the specific levels in this TradingView screen because of the contract change, but again, just look at direction of travel. And so on the YM futures, again, we look very bullish. So this is a 4-hour chart. If you look at the March lows, we get a wave 1 up still in March, a wave 2 down to 78.6 retrace that bottoms out towards the end of March, a nice wave 3 up, 1.618 extension that peaks in the middle of April, a nice A, B, C correction down for a wave 4 low that struck at the end of May, and then a really strong 5th wave up so far. And that 5th wave could peak probably somewhere between 34,200 and 35,000, let's say. So if you just pick a number in the middle, let's say 34,500 is where we may see this wave 5 terminate before a turn down. But overall, Dow looking good. Russell is the IWM ETF. So as you know, we've been using this pure Wyckoff cycle analysis for the Russell because it just works so well over the last few years. We set the volume profile to begin at the all-time high there. This accumulation box since, again, May last year. So the last 12 months has been just straight buying by institutions. You know, the fear that's been spread everywhere has not been shared by institutions. You see it from index across index across index, from stock across stock across stock. It all started a year ago. We're reaching the top of this accumulation box. Now that could present some short-term resistance in the Russell. So if you were doing nothing other than trading this accumulation box, and that's a pretty good strategy, by the way, because if you were to, and again, this is a fairly standard pattern, you could have done this in 2018, 2019, 2020, buy at the bottom of the box, sell at the top, rinse and repeat. If you're very brave, buy at the bottom, sell, short, long, you can just do it within this accumulation box using the volume profile as your guide. So we may see some short-term resistance in the IWM at around 190, but at some point, I think this is going to break up to the markup zone. And if you look back to late 2020, early 21 in the Russell, when it breaks to the upside, it can break fast, really fast, because everyone gets all excited about the small cap story and so on. And so for the next markup zone, we may see a really strong sustained move to the upside. We're not there yet, so let's see. Let's look at the Russell futures, same comment, ignore the existing the spike up this morning. It's a contract change function. Just wait for trading views to catch up. There we go. So we reached a possible wave 3 high in the Russell futures. When was that? Yesterday. So we're around the 1.618 extension of this prior wave 1 here. So it may be that there's a short term downslide in Russell, could go down to around 1830 on the futures. That would retest that wave 1 high. But if so, I think that's just a temporary pullback before final wave 5 up. So again, pretty bullish on the Russell. Okay, let's look at Bitcoin and Ether. Now, the big story in crypto at the moment isn't really, in my opinion, the pricing of Bitcoin and Ether themselves, which I think we can happily call securities, because I'm not really sure why they're not securities. They seem like securities to me. So let's call them securities. So the security pricing is less the issue at the moment than what's happening to the infrastructure providers. So as you know, the SEC is suing both Binance, and they're alleging that Binance has operated an unregulated securities exchange in the US. Seems a fairly clear argument, not least because there are messages from the Binance's chief compliance officer to their CEO that they are doing, in fact, exactly what the SEC alleged that they're doing. So probably trouble's coming for Binance. It's the biggest single Bitcoin exchange. You would think that that's going to hit the Bitcoin price pretty hard. What happened when FTX failed last year was that Bitcoin got hit really, really hard for a short period of time, but it bounced back hard too. So it may be that we get a big sell-off in Bitcoin if Binance and also potentially Coinbase keel over or are heavily sanctioned or something else. Probably that's a buying opportunity, I think, in Bitcoin and Ether. So for now, personally, I'm hedged Bitcoin. We'll see what happens. I'm short Coinbase, COIN still. That's a nice in the money position at the moment. I think it can go further, but we'll see. And on Ether, I think it's probably best to treat Ether as a Bitcoin derivative, as in it follows Bitcoin action. It's a bit more volatile than Bitcoin. Probably lower volumes are to blame. So I think that Ether can for sure make a continued move up. But until this question of Binance and Coinbase, and no doubt others, are resolved, I'm not sure that that's going to happen anytime soon. So for me personally, I hope to be able to profit from the replacement of the current infrastructure, so your Coinbases and Binances and whatnot, with the grown-ups taking over the show. That looks to be in progress at the hands of the SEC now, so we'll see how that plays out. Okay, let's just skip back to our agenda for a moment. So we've done equity index review, we talked about Bitcoin and Ether. I'd like to take a quick look at the Inner Circle stock baskets. Now, you will recall, if you've been a member here for a while, we have two stock baskets. Core stocks, which is a basket that we picked on the, let me see, the 7th of February this year, and high beta stocks that we picked in March. Now, there'll be a note out later this morning, look for it, which looks at the analysis in more detail. But this basket of stocks, 5 stocks in each case, just to note performance. So this is on a total return basis since inception to date. So the core stocks up 26% versus 14% for the NASDAQ and about 4% for the S&P. So pretty happy with that so far. This is just on a simple equal allocation, no trimming, no adding, no cutting, nothing, just buy and hold, just very simple. The high beta basket, again, simple, buy all 5 stocks in equal proportions, no cash left over in the model portfolio, no adding, no trimming, nothing like that, just buy and hold. So 34% up for the high beta basket since the, I get the date right, so 1 second. So ignore what I just said. So high beta 17th of March. Let's try again. Okay. It looks like the chart was right, the date wasn't. Okay, so 34% up for the high beta basket since inception on the 17th of March versus 16% for the NASDAQ and 10% for the S&P. So again, pretty good so far. Now, you can see that the impact of this high beta, in other words, the volatility, which is that between, let me see, the first, well, from inception until early May, you would say, I'm not getting paid for the volatility, it's just tracking the indices. We then see the volatility show up. Beta, remember, means high beta means highly volatile. It means overreacts versus the S&P. And so you see it here in May. So this basket was underperforming the S&P and the NASDAQ through early May, but then it shot into an overperform situation through June. And that's the nature of a high beta basket like this. It's why you want to think carefully about risk with these stocks, because when they work, as you can see, they work really, really well. But when they're going against you, it can be painful. And so one has to think about that in the context of how much capital do you put to work with these things. Do you hedge and protect them, or do you just solve for risk with small allocations, or what? But again, you see the volatility starting to show up here. First, working against the portfolio, and then working for the portfolio. So both baskets performing pretty well so far. That's good. And we'll post a note in the service later on that goes into some more detail. That's all I want to cover today. So thanks again, as always, for being members here. The service is growing really nicely. Delighted with the performance of the service since its launch this year. Plenty more to come. And as always, if you have ideas, suggestions, anything at all you'd like to see covered in the service, I can't say that we'll definitely do it, but we'll definitely consider it. And if it's something that people want, we've always found our services to grow really well when they're member-led, as well as driven by ideas from our side. So always reach out with any ideas, suggestions, criticisms, comments, either in the Slack channel or privately by email. Thanks again for being a member. I'll talk to you all soon. Thanks.